Welcome to the ARMR Report. I'm Brett Rosenthal. This is usually a show that does not involve a phone call right before we get started. Look, this is about stock market investing, and today what we're going to talk about very briefly is how to use spot gamma information to make money trading the indexes. We do this every day on the ARMR live trading desk. Okay, so what we do in the morning, we come in, we access our spot gamma information, we apply it to our charts. We then look for triggers in the morning, put positions on using those locations. It's a process we do every day. Anybody can do it. And I'm going to share for you how we do it. So obviously, this is how I run my own personal capital on a daily basis. I'm not telling everybody to go out there and trade indexes. It might not be for you. All right. So you have to do your own due diligence and all those other things before you ever execute this plan. But I do want to share with you the step-by-step approach to trading indexes using spot gamma information, and in this case, ARMR algorithmic entry points or the buy triggers. Now, this is an educational video. You can use your own gamma information. You can use your own trigger. Anybody can do this. Okay, I'm going to share with you how we do it. I think Spot Gamma is the best way to get the information. It's a fantastic website. Go check it out, spotgamma.com. And of course, if you want to subscribe to the ARMR Report, you can do it right here, and you can follow us along. We have a live screen share where we trade in the morning, and I walk you through the process of how we're using the gamma information to put the trade on, along with proprietary algorithms that give us the buy triggers. So consider that if you'd like. It's up to you. Certainly, if you enjoy this conversation, the old hammering the like button helps me out as it grows the ARMR Report army of analysts, as I like to say. So we're all on the Slack room every day sharing information at the ARMR Report, and I appreciate all the work you all do. So if you like it, give me a thumbs up and all that kind of stuff. All right, let's get to how to make money using spot gamma information to trade the indexes. That's what we're doing. I find in many cases there's a lot of information out there that may sound Greek to you. It certainly sounds Greek to me before I started reading Spot Gamma, okay? And so at the end of the day, I just want to know how to make money with it. How do I make money with the information? So I'm going to just show you one thing that we do on the trading desk every day. Let's go take a look, all right? So first thing, grab a pen, grab a piece of paper. In case you're new to this, you might want to jot down a couple of steps. You want to set up your chart so it's a 3-minute bar chart. This is how I do it. You can do whatever you want, use your own tools. I'm sharing with you what I do. 3-minute bar chart, okay? Blue bars obviously are up bars, red bars are down bars. Now, all the different lines, first of all, I show you this screen here because this is our day trading the index screen. The S&P, the NASDAQ, the small cap index, the Dow, and volatility. I don't trade every one of these indexes, but I use them as guides to trade the S&P and the NASDAQ. So I'll watch small cap, I'll watch the Dow, and I'll certainly watch volatility because it gives us a clue when we get to certain key gamma locations that a trigger could be right around the corner. Okay, and so we get ready for that. It also helps us with our exits. Once we get on a good trade, we start making money. And I'm going to show you how we did that today. I'll show you where we booked the profits. So what we're going to do is start with the S&P chart. So I'm going to blow this up for you. All right, I'm just going to walk you through the process of today's trades. And let's just blow it up a little bit. So here's the day's trades. We see it was a gap down morning. This was one of my favorite setups. When you get a gap down morning right to key gamma locations, it's almost a no-brainer of a long setup, and that's what that was today. So let's go over real quick again, for those of you new, what this chart is. 3-minute bar chart. The purple dashed lines are the spot gamma locations. Okay, so this is taken right off Spot Gamma's report. I'm a subscriber. I suggest everybody subscribe to it who wants access to this information. Okay, and then it's, of course, your job and my job to take the information and figure out how to turn it into gold or Bitcoin or Ether or whatever you want to call it nowadays. All right, so every other line in this chart is part of the ARMR price movement profiler, which is our trigger system. The black dots are the volume weighted average price, the VWAP. The lines above and below are 3 standard deviations above and below the VWAP. The horizontal lines represent Fibonacci extensions above and below the opening range. Now, look, guys, I'm going to call it ARMR Fibonacci, ARMR VWAP. You can use regular fibs and VWAPs off of traditional Thinkorswim or TradeStation websites or what have you. Our algorithm takes those basic tools and infuses them with a volatility component that we think makes them more accurate. But you can still use these tools at the very least to get yourself started when it comes to trading. I think you'll find they'll help you. So the third and most, maybe one of the most important things for us when it comes to booking profits is always the average true range, that blue line right here. The ATR high and low is very important to us. You'll notice that typically an ATR is a flat, straight, horizontal line, but what we've done is we use top day and multi-day volatility to change that line. So the top day will come down a little bit, the bottom line comes up a little bit throughout the day. Okay, but those are your basic lines. So here's what we do. Ready for this? Here's how it happens. Market gaps down at the open, as you can see, right to a key spot gamma location. It happens to equal the mid-range of the ARMR opening range, which I love. When I get confluence, when I get a key gamma location that equals a key ARMR PMP location, then I really start to think, all right, I got to look for a trigger bar. So for us, I'm going to just paint it for you. The trigger bar happens right here, and this is where we put money to work. Okay? And actually, it started 2 bars back. What we look for is a 3-bar reversal off the open. So we get a gap down that takes us to a key location. We wait. We don't act until we get 3 strong bars in a row that take us above the VWAP. So if you're writing this down and you want to know the steps to this type of a trade, gap down, step 1. Right to a spot gamma location, step 2. Trading below VWAP, step 3. Then you get a reversal back above VWAP, step 4, put capital to work. Okay? So we put capital to work right there. The stop would have been a new low on the day. You might argue that the stop should be the next spot gamma location. And you probably would be right in this instance because a new low on the day and the next spot gamma location is so close. And this happens to be the put wall. So in this particular case, I would have stayed with this trade as long as it stayed above this key location. Okay. But anyway, the best trades never challenge the stop. That's the key. And so on a morning like this, what we're doing here is what I like to call, it's my favorite trade because we're capturing alpha. In my portfolio, I have a couple ARMR portfolios I share with subscribers. And in ARMR Portfolio 2, it's geared towards algorithmic trading. We swing trade the indexes using our algorithms, and then we take a large portion of our capital, and all we do is day trade the indexes using spot gamma location and our triggers, okay? So this is an alpha capture day. The market gapped down over 1%. It's a no-brainer day to put money to work. I feel like the gloves are totally off when that happens. What's the worst thing that happens? If I put capital to work when we go back above VWAP, what, I take a loss because it hits the next stop? The market's already down big. It'll just be down bigger, and I'll still have alpha in the portfolio because I have so much cash coming into the day. So to put that cash to work is literally a no-brainer. And when you can get your emotions out of the decision, boy, you become a better trader. And so that's this kind of morning is like, there's no emotion to me at all. I came in with tons of cash, market's down over 0.5% or 1% on NASDAQ, and I'm putting money to work. It's just a no-brainer trade. So there's the trade. We put a big position on our max position size right here. And the target, for me, there's going to be 2 targets. One is going to be this blue line. I always book some profit at the ATR high of the day. Okay, so I'll just highlight for you. I usually take 25% of the position off at the ATR, and I'll do that in a couple of different ways. So, there'll be some I take off right when I hit that line, and then it makes these tops and breaks back below. I'll take some more off. Okay, but the real, the final location, I shouldn't say final, the next logical location is the next gamma target. So you could see for a moment, the market stopped right at the ATR high of the day. Okay. And on another day, I'll explain this yellow line right here. This is an ARMR moving average, and that tends to be resistance as well. So it stops right here. I'm going to book some of my gain there. Then it pops up to the gamma. So here's the next spot gamma location, puts in a triple top right in front of the Fed minutes. Forget about the reasons, but it puts in a triple top. That's your second place to book your profit. And then, of course, you raise your stops along the way. So maybe you've been taken out of the position for now. I don't know. I'll leave that last piece up to you, right? But there's the way I exit is I exit 25% at the ATR, and I'll exit another 25% at the next key gamma location, and then I'll carry 50% with a trailed stop. That's generally what I do. And I don't do that all the time. Sometimes I put on a huge position early, the stock pops quick, and the dollar amount of my gain is such that I might be done for the day. And I put on a really tight stop and say, I made too much money. I don't really care if it goes up a little bit more. But my job, I feel, for armrInsiders, for anyone following what I'm doing, is like a captain of a wicked tuna boat. Okay. I want to put you on the fish. Spot gamma is going to put you on the fish. Spot gamma is like a depth sounder on a boat. It's literally going to show you where the fish are. Right. And we're going to put you on it, and you're going to hook one. And then how you book the profits up to you. I mean, I'm just sharing with you what I do. I sell some at the ATR. I'll sell some at the key gamma location, and I'll trail stop the rest. But any exit that works for you is perfectly fine. So that's the setup that we traded today. And I'm just going to quickly rip through. I want to try to keep these videos shorter than normal for the ARMR report. I tend to speak forever. So let's just quickly go through the same exact trade. I did want to show you this real quick. So here's VIX. And so how do I use VIX to help me when I'm trading? Well, when you see the move higher in the S&P that gets us long as the S&P went above the VWAP, at the very same time, VIX is going below the VWAP. And so the trade is on. And so it's just confirmation of what we were already doing. That's why I love to watch VIX. Okay. So let's just quickly rip through here. It's the same exact thing, but this time it's going to be the NASDAQ. Okay. Gap down, testing prior day's low. Now, the difference here is there's no spot gamma location. So you're going to say to me, well, why did I put that trade on? Well, I'm a big fan of confluence. And the beauty of the spot gamma information is you can use a turn in the S&P to trade another index. It's not always that the index we're trading has to touch a spot gamma location. So when we get that perfect setup in the S&P, I go over and look at the NASDAQ 100 and I say, what's happening here? So for us, in this case, we're using the ARMR PMP as our guide to locational trading. And one thing obvious to me is we're trading prior day's lows. So we gap down and test prior day low. We have the same 3-bar reversal. So there's confluence at the same exact time as the S&P. So I don't care that we're not all the way down at the spot gamma location. I'm going to put that trade on. Okay. Right here. And it might interest you to know that I'm fairly certain yesterday's gamma level of the put wall was right here. So it dropped down for a day because of the selling yesterday, but yesterday's spot gamma put wall was right here. And so that's interesting information to know as well, because it's just a pure reason to put a trade on here. And look how this asset runs right. So obviously I'm going to take some off right here, right? I book a little bit of profit. Actually, I didn't do that today here. We didn't do that today. We ended up booking our profit up here because in this particular case, I just said, look, this is so tight to the opening range. It's not much of a movement. So I needed the extension to the spot gamma location in this case. So I think I booked like 10% of my gain here, just a small piece, just to keep myself honest. And when it popped up here, I booked the rest. But you could see now that the spot gamma location has held the market in check the rest of the morning. So somebody commented on my last video that I did like this, that I'm making it look too easy, that I'm making it look too mechanical. And in all due respect, my friend, this is a mechanical bull market. I've been calling it that, if you've been following me on YouTube, for years. It's a mechanical bull market. You're absolutely right. The market behaves mechanically, and so do we as traders to maximize our return. There's no surprise there. You say I'm making it look too easy. I'm sorry, my friend, but it is this easy. It's not hard. I think traders and a lot of guys on YouTube try to make it seem like you need an MIT degree to make money. You don't. You need good information. Spot Gamma gives you the locations. You need a good trigger. I provide that trigger, but you can provide your own. Everybody's got their own way of identifying a turn. Okay, I share mine on the live trading desk just because that's part of what I do, and I think it's fun, and I like to try to educate and help people out. So I walk you through what I do. But you could do your own trigger. It's not that hard. Get your emotions out of the equation. Execute the strategy mechanically. Keep your losses small. Capture your upside. Rinse and repeat. We did it again here. Adding the position here, rallies up, taking the position out right here at the next gamma location. Trading's done for the day. This live stream is done for the day. I hope you guys found it helpful. I'm going to do this for you periodically just to show you how we trade so you can see the process and you can start doing it on your own. If you'd like, obviously, I'd love to see you subscribe and join us on the trading desk. But honestly, I'm doing this for education purposes. I've got it listed for you. So if you want to subscribe to the YouTube channel under the education series and under the playlist, how to make money using Spot Gamma information. Now, what I'm going to do under that playlist, Spot Gamma information and our education playlist, is to show you right now. I'm just walking you through the process of index trading because it's the simplest thing to do. And I find gamma information is the best, the more liquid the asset. So obviously on big indexes, it's the best. If you're new to this, I think you should just trade the indexes to get started. Get used to the process. You'll have the highest probability of success. Do it over and over until you get good at it. Then you can branch out into individual names using Spot Gamma's resources. And I'll walk you through that as we go forward. I'll do other videos like this. So anyway, I hope you all found this helpful. Have a great Thanksgiving weekend, and I'll look forward to seeing you all next week. All right? Don't forget now, stay nimble out there. All right? Take care, everybody.